bank's lunch. And maybe to an extent that's true, but I'm going to begin, Markus, by talking to you about this. We had a coffee this morning, and you say that you do not want to disintermediate the bankers. So you don't have to lynch Markus when he's leaving, okay? Explain why you're A, a disruptor, but B, you're not a disintermediator.
Well, thanks. I think when I founded the company, and this is 8 years back, and by the way, at that time, the term fintech didn't even exist. I was out there to do exactly what you just mentioned, to disintermediate the banks, because there's obviously some potential for disintermediation, because when you talk to banks and talk about innovation, there isn't a lot going on except what is just currently happening. So i.e. when I was asking a crowd like yours in a presentation, what was the last innovation in payments, normally people would refer to PayPal, which is, by the way, not a really payments innovation, and it's 18 years old. So, but coming back to your question, I think the point is that especially in B2B, people still trust banks. And Kerry has also mentioned that. It's just true that when you talk to large corporates, it's much harder to address them and to serve them with services than if in B2C, where you just don't care. You pay via PayPal 20 quid and they may be lost and maybe not. But to convince a treasurer to really use your services, I think it won't happen with a disintermediation in banks. So it's what also Kerry mentioned before, it will be alongside the banks and together with them.
Okay, so to try and understand what it is you do and how you're doing that while including the banks, we had a conversation, and when I really got it was when you explained an example. You're based in Germany, you've got offices in the United States, and you talked about a big German chemical company, for example, who you're working with, and one of the big German banks you're working with. And if you can talk us through how that transaction works, then we'll get a clear sense, I think, of how what you're doing works.
So, who we basically serve is, we serve the bank as well as the buyer and the supplier. And I think to understand the proposition, you have to understand the three use cases for each of them. Now, let's start with the easier one, that's the supplier. In today's world, a supplier always, struggles to have money, and, he always needs some financial help. Sometimes they don't get it from the bank anymore. So what he's down to is he has a couple of silos where he has to resource his liquidity from. So he has factoring. If he's lucky, he has reverse factoring. He has some means of dynamic discounting if he's really modern, and he has his bank line. Now, the problem is that he can't go across all these silos because he's stuck to them, as it happens, because most of the products, if you think of factoring, they are decades old. So he's really stuck in these silos. So what he would like to have is, he would like to have the best offering on a single invoice, but he cannot achieve that in today's world. This is something we solve because at the end it all comes down to data, and you have the data, you can solve these issues. On the buyer side, we also talked about that, and I don't know who of you is familiar of the situation in Europe. We have negative interest rates today. So if this large corporate that we just talked to in the chemical industry, they pay 0.4% money, interest rate on their money in the bank. Now, obviously, the CFO of all these large companies who have excess cash do anything to get better rates. If you talk to bankers in Germany and ask them, what is a good rate they could offer to their clients, they would say 0%. Now, obviously, if you offer those large corporates any means of maximizing their money and potential from the investment, they can do that. So we just talked about reverse factoring, and again, many of these large corporates offer reverse factoring models to their suppliers because they still have, 90 days payment, what's the term? Thanks. 90 days payment terms. So when they get paid 120 days, and they want to do something for the supplier, so they say, okay, I offer reverse factoring that you can factor on my behalf. Having said that, it's really strange that a reverse factoring company would walk up to them and say, okay, 0.5% interest rate, why doesn't this large corporate step in and say, okay, I pay you early for 0.3? So combining all these instruments on the supplier and on the buyer side is very important and very critical in B2B. Now, what's in for the banks? It was Hambi that said, data is the oil of the 21st century. And I think it's a little bit funny saying this in Arabia, because obviously you have the real oil of the 21st century. But I still think it's true. And as much as everybody is trying to gather data in B2C, it is obviously way more important and way more interesting in B2B. Now, we learned in the past that PayPal had a very, very big potential to disintermediate banks, and actually they did. Nobody was taking them serious 20 years ago, or actually 18 years when they were founded, but they really succeeded and achieved a lot. Was it really critical for banks? I wouldn't think so, because you still have your mortgage with your bank, you still do your pension planning with the bank, so it really disintermediated banks in B2C a lot, just in payments, and this is just a small piece of cake. Now, if this happens in B2B, the whole potential of this B2B platforms is way, way, way bigger, and they could be disintermediated much, much, much more than it happened in B2C. So the big risk that banks are challenging is they cannot be disintermediated because they would lose a lot of business. But on the other side, there are B2B networks out there who are going to disintermediate them. Think of SAP Ariba, who has 2.5 million customers right now. They are already planning and already have announced some cooperation with companies who could disintermediate them, and this is what they are planning and doing.
I know one of the issues you look at is digitalization, and one of the questions you get asked all the time is, so is this then simply just a back office function, back office operations, and you have strong thoughts on this?
Well, again, the US is a great example, and I always like to compare the US with Europe. If you talk about digitalization in banking, in Europe, it's mainly back office. So in Europe, you want to get rid of some of the people in the back office, just optimize some back office processes. In the US, you don't get additional business. If you're a startup in the US and you talk about optimization, they don't care. They only talk about additional revenue. Now, if you look at any bank, Citi is a great example. I think you have 3.5 million B2B customers. How much money do you make out of them? I mean, you obviously grant them loans. You don't make anything like Ariba does on this B2B connection. And by the way, this 3.5 million will probably translate in 35 million if you take this whole network and these connections. So right now, banks don't utilize the potential they have with their B2B customers. They're kind of waiting, what's happening. And to be fair, they are much more innovative and faster in picking up these thoughts. Maybe because PayPal happened a couple of years ago, but it's really at the edge where they need to decide and be much quicker than they used to be in making these decisions.
I've got a number of questions on this. We've got about 5 minutes left. I'm happy to hand over one of those questions to the audience. Who's got a question on this? Perhaps from a banker. I'm sure you could ask a far more insightful and probing question than I could about this. You'd be thinking, does that really work? Anyone's got a question? Happy to hand that over. Have a think about it. Stick your hand in the air. I'll keep my eyes open. We've got about 5 minutes to go. But I'll ask the question. So you say that you can work with the banks and you can help the banks. Why do they need a Traxpay? We've got the supplier of paper clips or sophisticated machinery or raw materials, whatever it is. We've got the buyer, let's take your German chemical company, and in the middle there's the banks. Why do they need a Traxpay?
Let's go back to PayPal, because I think it's a great example. What PayPal really did is PayPal changed the user experience and the way users were able to execute and initiate payments. Now, if you think of B2B, this is way more complicated because banks always struggle to kind of receive payments from ERP systems, and they are even less successful in retrieving data out of this ERP system. But as a matter of fact, is the basis of the data. I give you an example on this factoring business that I picked up earlier. If you would know as a bank that an invoice has been paid 30 consecutive months in a row, the likelihood that it's paid a 31st time is quite high. Now, no bank knows, because they don't have the data out of the ERP system, And as you don't have this data, you cannot tell. So what I'm saying and what we are offering is we gather this data from the systems and enable banks to create new products, because it will be new products to factor invoices on a one-to-one basis. But on top of that, they will be in control of their clients and receive the data that makes it possible for them to make new decisions on the liquidity of the client.
Okay, let me ask the question again. Happy to hand over this question. Anyone's got a question? I'll carry on. You're working with NordLB in Germany, one of the big banks in Germany. You got a patent for this a year ago, and you signed them on board. So they're one of the banks you're working with. I'm interested to know, what were their objections? What were the difficult questions they asked you before you signed up, and how did you address those?
Well, you get, especially in Germany, you get these typical questions because no bank in Germany is really used to work with fintech startups, because obviously the balance sheet looks a little bit different. This has advanced in the US, and we just went live in the US also, and the conversations we're having are way different to Germany. But then I think it's really a matter of rethinking this kind of business. And again, I'm giving you an example from not NordLB, but another bank we had these conversations with. And I said, listen, we are offering you this kind of services, and it enables you to refinance invoice on an ad hoc basis, so on a one-to-one basis. And the guy, one of the bankers looked at me and said, but this is a new product. And I said, welcome to the real world. This is a new product, so you have to go through a new product process and innovate on products. And he said, well, we are not sure if we can do that because this takes so long. And I said, listen, you don't have to do it. You can also be just a multiplier to offer the services, because if you don't do it, others do it. And then he looked at me and said, yes, but utilizing this B2B network is not a bank product. So I think, there are a lot of banks still in Germany who haven't made this next step to say, okay, what are we selling beyond banking products? What are we selling beyond financial service products? And this is, again, in the US, but also in Europe, a little bit more advanced in B2C. People start thinking about it in B2B, but it needs some more thinking. And the business is, I think way less innovative and disrupted than in B2C.
And what about, final question, what have you learned on your trip to Dubai? You've been coming here for 20 years or so as a business person, as a tourist as well, and here you are at Seamless 2017. You're busy, you don't go to every conference around the world yet, you've decided to come here. What was it about Dubai that made you think, I think the banks in that part of the world are ready for this, and the corporates in that part of the world are ready for this?
I think Dubai is really the gate to Asia and Africa. And the beauty of the solution we are providing is that it's, payment agnostic, payment channel agnostic, so we can also utilize the blockchain if we have to. To be honest, I doubt a little bit that corporates will do this in the short term, but anyway, we are currency agnostic, so it really doesn't matter what we are doing. So it's really to get out the word of mouth that people who are more innovative thinkers, that what I experienced in the past, that some of the players in Europe, I want to get to those.
So the bankers who are still in the room, there are plenty of you. We talked about, are disruptors like Traxpay going to eat the lunch of the banks, or sit down and eat lunch with them? Which do you think for Markus and people like him? Raise your hand if you think they're out to eat your lunch, and raise your hand if you genuinely think that they want to collaborate and eat lunch with you. Okay, well that's good news.